Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. A quick emergency update from the last video. I can see from the comments quite a number of people are wanting an update, and usually I don't have much time, so I've tried to find a little bit of time just to give you a quick update and to reassure everyone that what you see in the charts, you've really got to take the panic and the emotions out of it and just look at what the charts are saying. And before I begin, I just want to give you the quick polite reminder that please remember I'm not your financial advisor, and everything in my videos are just for educational purposes only. Please do your wider research before making any investment decisions. So with that out of the way, let's have a quick look at exactly what's happened since the last video. So a quick recap. This is what I was expecting. The price was around about here, at around about the 48,800, 48,700, around here. And as this was developing here, I was expecting one more leg up to the 49,300 level, as I mentioned in the last video. And from here, I was expecting a correction all the way down to around about the 45.5 mark here. The 45,500 correction was based on taking the Fibonacci retracement from down here to the 49,000 that we were expecting. If I just move this to the left so you can see where we are with the figures. So we've seen over the 11 years that Bitcoin has a very high respect and tends to gravitate towards the 61.8 figure. And that was at this level here, at 45,500. So this is what I was expecting, to go from there, correct from there down here, to create this double bottom, and then we go forward up from there to the next level. So what's happened in the last few days is that instead of going up to the 49,000 level, we've had this correction, which I was expecting. However, the correction's gone much, much deeper to these levels down here. Now the question is, am I surprised or shocked by this? Well, in the last video, you may recall, I showed you the 21 weekly exponential moving average, and I said quite clearly that before we got this week's candle here, that these two candles and the way the pattern is developing makes me think that we may well come back to retest this 21 weekly moving average, which I showed to be 44,000. So this is not a shock. Although I said it's unlikely that it'll come back down because we've already had two support levels here, but many times in the past, if we have a look, on this level here, we've had several support situations. So it's not unreasonable to think that we could have a third support here. Now, so obviously the price has come down to this level here, around about the 39,400, 39,500 level. And this is the weekly candle. So during the week, this will be oscillating around these levels. And the main thing is really not to close below this 21 weekly exponential moving average. If we close below the 43 level here, that would be of a great concern, because that means that we may well end up with a bear market for the next few months. As I mentioned at the time when we broke this level here, I said at the time that usually we come back up, but if we actually did not get back very, very quickly above the 21 weekly, then this is more likely to follow. And this is exactly what I'm saying here, that if we do close below the 21 weekly exponential moving average, then there is a very high likelihood that we're going to be in this price range down here for the next few months. And all that will do is to elongate the current bull market. I know quite a lot of people think that we've reached the top here, but there are no signs for me anyway, and it's only my opinion, and people may well be right that we have topped here, but in my humble opinion, this does not look like a topping out pattern. On any market, this does not look like a topping out pattern at all. We normally have a blow off top, similar to, this is what you call a blow off top. And this is what you call a blow off top, when you have a huge run up and then an immediate fall. What we have here is a run up, a correction, and a rounded pattern here. This does not constitute a blow off top. So for me, as I've shown you with many of the exit indicators, none of the exit indicators are showing anywhere close to a blow off top market or the end of the bull market. So my opinion is that we are just basically here going to be doing this, creating this double bottom pattern before we move to the upside. So the main takeaway really is that at the end of the week, we should maintain our position above the 21 weekly exponential moving average, which is currently at around about $43,500 mark. Many people have mentioned the hash ribbons, and as we know, we got this blue buy signal here on the weekly chart. And as we are aware that in the last 11 years, this blue buy signal on the weekly hash ribbons has never been wrong except in the COVID-19 situation, which obviously was a one-off event. Now, this blue buy signal closed here at the $43,800 mark. I've always referred to it as 44,000. So as we can see with this current weekly candle, remember this is not closed yet. We still have 4 more days to go, but it is currently below this level of 44,000. And the hash ribbons record is that once we get this blue buy signal, we never close below that ever again. And that has been true over the last 11 years. So now we have 4 more days for this red candle to wick back up and close above this line here at 43,700, 43,800 to maintain the hash ribbons record. Obviously, if it does close below this, all it tells us is that we've now got another piece of information which says that in the last 11 years, with about 12 signals that we've had with the buy signals, one of them has now become incorrect. And it just means that 11 out of 12 were correct and 1 was wrong. And we take that on board. We must always remain fluid and flexible and not start thinking that, oh, just because this indicator is wrong once over the last 11 years, that we need to panic or anything. Because please remember, no indicator is 100% accurate. So somewhere along the line, it may well be that it is incorrect. Am I expecting that? In my opinion, we've had many of these candles like this. If we look left in the chart here, look how many times we've had the price threatening to go down, but within the week, at the end of the week, before Sunday night, it wicks back up many, many times. It's happened here as well. So it is entirely probable that we're going to get a wick here by the end of the week. Only time will tell, and we just need to remain fluid and flexible. And I'm going to give you a quotation from a very successful trader. Before we can win the battle against the markets, we must win the battle against ourselves. And to do this requires a huge amount of discipline and patience. So we can see quite clearly from this, when we zoom out and look at the bigger picture on the weekly chart, it's quite clear that these wicks during the week are actually quite common and a characteristic of the Bitcoin price. And it may well be that we have one more wick here. And if it doesn't, then we just adjust our opinion and our view of the markets accordingly. If we have a look at the VPVR, the volume range, so the price fall here has fallen in this gap equivalent over here in the volume range. But also if we look left on this weekly chart, we can see quite clearly that this level coincides with this resistance points here, and this resistance and support here. So it's very natural for the Bitcoin to fall to these levels here. So again, we shouldn't be surprised or panic regarding this. And it looks like a natural level for us to bounce off. And the question is, can it come any lower than this? Well, very simply, if we take the Fibonacci retracement level, and that's what you'll see with these 2 red lines here, these 2 correspond to the Fibonacci levels, that if we take it from the previous low here to the high that we've just made at the $52,000 mark, 52.53, if I just move it there so we can read the figures, we can see that the 61.8 level and the 65% golden pocket level are the 2 lines here. So these two lines is where I would now be expecting the price to come back to, maybe in the next few days. But certainly, if it did come back before Sunday, then it may well be that we have a wick down here, and then it goes back up before Sunday close above the 44,000 mark. We'll have to wait and see. It may not play out like that, but certainly the level to look out for is really 38,396. So call it 38,400. We may wick down to 38,400 before we bounce off properly. If we were to fall below the 61.8 level here, then the next level to look out for would be the 78.6 at 34,400 at this level here. Seems very unlikely that it would go down to those levels. With Bitcoin, everything is possible, so we need to always be aware of it in case it happens. But the most likely scenario is to bounce off the $38.4 thousand mark here. A quick look at the Fear and Greed Index. Quite clearly, within the last few weeks, we've fallen from extreme greed, 79, which was telling us that the market was overheating, it was overbought, to now extreme fear at 21. Down here, we spent many months creating this structure here, and in the last few weeks, we bounced back all the way up here. So we were due a correction at any time here. Now, the good thing is that we've actually come back and retested these levels again at around about the 21 mark here. So this is your opportunity. These are the opportunities to actually accumulate rather than panic and get out of the market. And this is just the way the Bitcoin market tries to shake the weak hands out of the market. And we don't want to be the weak hands that are shaken out by this market here. A quick look at the crypto total market, because just like Bitcoin's come down, we've noticed all the altcoins have come down as well. So the total crypto market, which includes Bitcoin and every other altcoin out there, this is where we said the market was going to fall down from. So we've had this correction, and we've had it down to, first of all, this 38.2 level. Now we've reached the 50% level here. And ominously, the 61.8 level is at this level here. So we can see that there is a little bit of wriggle room to come back down to those levels. So it may well be in the next few days, the market does fall a little bit, both for Bitcoin and all the other altcoins, before we make a trip back. And that would then create another W double bottom pattern here. So you can see when we zoom out on the larger picture, it doesn't seem anything untoward has happened. It just seems like Groundhog Day for Bitcoin and the other altcoins as well. If we have a look at this trend line here, you can see quite clearly that from the COVID-19 fall that we had back in March 2020, we've been creating this very strong structure here. I'm of the opinion that we found very strong support here, here, and we're now coming to another support here. So as long as we don't break this structure here, I'm absolutely fine, and there should be no concerns about the whole total crypto market, which obviously includes Bitcoin. So everything is playing out. We're just coming back to find support on this blue line before we start breaking these all-time highs. A quick look at the daily pivots here. And again, it's quite reassuring to see that when we were over here and having a correction, and I said that at 52,000 we're going to see a very likelihood of a correction, which we got here down to these levels here. Now, when the market was coming back up to the 49,000, this is where I thought there would be a further correction. But this is where I thought the price would have a bounce from. But what we've done is we've gone from the pivot line here and fallen down to the support 1 line here. And again, you can see quite clearly it's come back and found support on this line, which is currently at 39,400. And as we've seen with the Fibonacci retracement I just did a few minutes ago, that the 61.8 Fibonacci retracement is showing a level back to 38,400, which means that the price can come back down here, wick down to the 38,000 and come back again and find support. And you can see this many times. It happens that the price wicks below the pivot line or the support line, as well as wicking above those lines. So again, the pivots would suggest that we're going according to a certain structure and there is nothing to panic. And if we have a look at the daily RSI, this is the divergence I've been mentioning for many months now there, and it's now playing out all here. The interesting thing to note here is that we are now bouncing off the 30 level here, like we found support here and a little bit over here. So we are coming towards the bottom end of the RSI. So what might happen here is that what is a possible scenario, and very probable scenario, I would say, is that when the price comes back down to test this 61.8 level at 38,400, the RSI will come back down with it, but not to the same bottom as this one here before moving up. And that would create a bullish divergence. And that would be our signal that the price is now bottomed out and we're moving to the upside. And finally, just to have a look at the levels we could be coming back up to. So once we get past these choppy waters this week and possibly next week, then more than likely we're going to be testing this strong trend line that we've been looking at over the last few weeks. So wherever we come to here will be our next point of correction before we test this line here at 58.59 and then this levels here at 61.62 and obviously the 64,000 all-time high level here. So in conclusion, the question is it time to panic? Absolutely not. As long as we don't close below the 21 weekly exponential moving average, this is the key. As long as we remain above this level here at 43,800, around that level, 44,000, we should be good to carry on with the bull market. Okay, so we'll leave it there. That was just a quick emergency update. And if you enjoyed that quick update and analysis, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next video, take care, stay safe, and I'll see you in the next video. Bye for now.